Hey, what's going on, you guys? Welcome to the video. Hope you guys are doing well today. This is Chris from Verillo Trading. All right, so we're going to do a little Saturday video. I wanted to talk to you about a few things and kind of go with the flow and see what happens here. All right, so you're looking at a recording from my screen yesterday. As you can see, I've changed my screen layout, and I'm going to tell you why in a minute. Before we get started, don't forget to hit the like button for the YouTube algorithm. Let's do it. A couple interesting things I wanted to talk to you guys about in this video, and some of it actually might blow your mind, especially if you're new to trading. So the first thing is there are no charts on the screen, except for on the left you see a footprint chart. I'll tell you why there's no charts on the screen. I personally come from a background of charting and technical analysis. That's how I started learning about trading, from looking at charts. Now, I recently realized that because I got so used to looking at charts that they were actually hindering my ability to read the real-time order flow, and I was finding myself very distracted. So I said, the hell with it. And you know what? It took me a long time to say that. Okay, it took me a really long time to admit to myself that the charts were distracting me. And I'll tell you why. I'll go into detail a little bit about this. So a chart is a representation of what already happened. Therefore, it is not necessarily representing you any evidence of what future prices will be. And that is why it can provide a great distraction, especially if you are trying to read real-time order flow. Actually, just literally going back and looking at past recordings, I can see where my cursor was on the screen. And I found a lot of times when I'm doing certain trades, my cursor was on a chart on the other screen. Meanwhile, I was not paying attention to the dome. Then I took a trade, and then I was offside on the trade. Why do you think you took a wrong trade? Because you weren't even reading the tape properly. You were staring at the chart half the time. And guess what? The chart is not a representation of the true order flow right now. So that's sort of the first thing I wanted to say in this video. Now, that being said, charts are not completely useless. That I know. I'm 100% aware of that. Charts are very useful for certain things. I can tell you what those certain things are. First of all, a footprint chart is one of the most useful charts because it is literally a recording of what happened on your dome in a volume at price sort of display. A footprint chart is a good use of context. It still doesn't tell you what the live order flow is. It's simply recording what already happened. Fine. If I fast forward my video a bit, you'll see that I look at a range chart here on the left side. Now, there's certain advantages to looking at a chart like that. And again, the advantage doesn't come in being able to predict the next few ticks or the next move. That's not the advantage of the chart. The advantage is simply being able to reference it and say, where did the market stop? Or is there an obvious low or an obvious high that I should be fading or getting in front of because it's about to get taken out with some stops? And also, it's a good way to kind of identify your major trends. So I use these regression channels just to get a general picture of if the major rotation is up or down or sideways. These are 17 tick range bars, and over here you can see that there's probably at least 1, 2, 3, 4, 5, 6. There's about 10 ranges that took place all in the same price range. Therefore, the price is coiled up, and I could see that if I was just staring at my dome for the last 5-10 minutes, but at the same time the range chart is actually displaying that in a very clear way. So when I see that on my range chart, I know that the market is coiled up, and I should probably not be looking for a trade right now in that coiled up range until the market shows some sort of initiative out of that coiled up range, and that's where the opportunities will start to open up. Again, the opportunities are always in the eye of the beholder. You can certainly trade within those coiled up ranges. However, it's a different method than if you're looking for momentum, for example. So that's one way that I'll use my range chart to kind of help understand the context of the last 2 or 3 rotations. But at the end of the day, the chart is not helping me to determine what's happening right now. That's why I removed it off of my main screen. So you guys with me? So this is what I've got on my main screen right in front of me. I've got the NASDAQ here on the left, and I've got the S&Ps here on the right. I do not trade the S&Ps. One of my New Year's resolution is to get better at trading the S&Ps and learn about the quirks of the S&P futures as well. Right now, I trade the NASDAQ mainly because I've grown comfortable in trading that market. At the same time, it's important to look at the S&Ps because it is, in fact, the most correlated market to the NASDAQ. The S&P, I think, is still at least 30% holding in tech. Don't quote me on that, but it's a lot of holding in tech stocks. So that's the first part of this video. So the next part of this video, I'm going to talk about something that I find very interesting. So here it is. Leave a like on the video if you've made it this far. All right, cool. So when people get into trading, they think of it as this way that they can make some extra money, that they can sit in front of their desk and learn how to do something that brings them some extra income, let it be through investing or trading. Trading is different than investing. Do not confuse them. Okay, so here's the thing. Every advertisement you will see about trading shows you a guy with a Lambo next to him, and he's walking around all calm and collective saying that you should buy his trading system and that you're going to be able to make some profits. The next thing is, often when you look at videos of people trading, they're sitting in a desk in front of a computer screen, very calmly analyzing the data in front of them. Now, I'll tell you what the problem with that is. Do you think that you have a competitive edge over people that have been doing this for years if you're just going to be calmly sitting in front of your screen looking at this data? Do you honestly think you're engaging your competitive skills by sitting down in front of your computer analyzing this data? So what I've come to realize after watching videos of floor traders, go watch the documentary Floored, you'll see what trading's all about. What they used to do on the floors 20, 30, 40, 50, 100 years ago, that's what trading is all about. Okay, they weren't sitting calmly in front of their screens. The whole thing is these guys were competitive. They were standing up, shouting at each other, fighting for the best price. Let's go find a photo. Do these guys look calm to you? Do these guys look calm and collective sitting in front of a computer screen trying to gamble on the NASDAQ price? They are hungry. The difference between these guys and the traders of today and the thought process about trading today is that these guys right here were friggin' hungry for it, man. So picture your average trader in 2020 sitting behind a desk looking all calm and stuff. Now look at these guys. Do these guys look calm to you? I do not think so. These guys are hustlers, okay? These guys are competitive. These guys are savages, man. They will do anything to get the price that they're trying to get to make money on the day. You know why? Because they've engaged their natural primal, they've engaged their primal instinct. They have become savages. They will do anything to win. And that is the state of mind that traders are missing these days. And that's what I've realized yesterday. So that's basically what I wanted to get across. So this whole thing about computerized trading has made people way less hungry for the prize, essentially. So if you're able to tap into that survival instinct while you're trading, you will probably be able to fine-tune your focusing abilities to be able to find what it is that you're going to use to make yourself these profits in the markets on a daily basis. I'm not saying that you need to approach the markets and think you're going to make full-time income from it or like risk your rent money or that stuff, because that's completely different and that's really stupid to do. But at the end of the day, if you approach this like a job that you need to hustle and show up every day and be better than the rest of the people next to you, you will gain an edge over the majority of people, because now the majority of people are sitting in front of their computer screens in their comfy gaming chair thinking that they can make money trading. But in reality, if you want to make money trading, you need to be a savage. So I'm going to leave you with that today. And I hope this video helped you guys. I wish you all the best and take care. Ciao.